Welcome to your Mortgage Insider Update for April the 7th. It is the week after Liberation Day. Tariffs on the whole world globally went into place last Wednesday. If you haven't heard, the stock market is down significantly in the process. Interest rates came down pretty significantly. They seem to be finding a floor or a bounce, which typically happens after huge moves, historic moves in the stock market not seen since 2008. So we're going to take a look at the stock market over the last 5 years and just see where that sits today, and then put some relative terms into with the improvement we've seen in interest rates. So coming off of earlier this year, mortgage rates of 7%, that has pulled back pretty significantly, about 0.5% lower overall. So we'll take a look at that and see what that means to you and your need for mortgage or financing in the near future. So this morning we're going to start with the Spider S&P 500 ETF just to look back in time a little bit at this stock market drop relative to the last 5 years. So this drop off is our fall just in the last high point of just over 611 on this index fund. Pretty significant drop. Now you can see over the history of the last 5 years, many would remember back March 2020 we hit the bottom. That was prior, pretty significant pullback in the S&P 500, followed by time periods of improvement, as well as pullback, most significantly back in 2021, starting 2022. Pullback in the stock market continued into October of that year. So we'll see where this chart takes us into the future, but for context, the money coming out of the stock market really impacted interest rates over the last week. So let's take a look. Following the 10-year Treasury up 11 basis points today after a huge drop-off at the end of last week. This is typical. We do see pullbacks where maybe an over reduction in interest rates on the 10-year is being rethought this week. Even though the odds of a recession in the near future have elevated, I think the markets are identifying that the Federal Reserve is unlikely to be able to do much as far as interest rates in the near term. So a pullback on the 10-year is indicative of a little bit of a reality check in the market, but either way, it's significantly lower. So in a one-year look at the 10-year Treasury, we can see that we've had high points back in April of 2024, just over a year ago, that was just recently exceeded back in January of this year, and since we've had pullbacks, but the significant pullback still does not take us to the low points we had at the end of in September 2024. So even though pullback in interest rates is welcome, it's not as significant as one might have hoped, but we are using this as kind of our floor. This is the future if we continue down this path of trending lower interest rates. That will take some time, and will take some time to find out if the tariffs are going to stay. So really, we look back over a year, there's lots of volatility in the 10-year Treasury, just in this example. So over the coming months, I see no reason to think that there's not going to be more volatility. It never goes in a straight line. We could see bounce backs higher, but generally speaking, the trend does feel like it's starting to come down, at least in the short term here. So what does this mean to you and your personal mortgage portfolio, or even just your stock market portfolio? Don't react or overreact, but pay attention. The reason I send out this video to some people more often than others is relative information. If you're getting this for the first time in a while, it's good to keep an eye on those interest rates. And if there's ever a need that you have to talk about your mortgage needs or your plan for your family and your financing, please feel free to reach out. I look forward to staying in touch.